I do see this potentially going to the Supreme Court. We may have a split in the circuits. We'll watch these cases closely. But what's important is that we continue to adhere to our federal regulatory statutes and adhere to the law.
That was CFTC Chair Mike Selig at the Milken Conference just yesterday talking about prediction markets. We're going to get into that and so much more with Robinhood CEO Vlad Tenev, who's at the table this morning. Good morning.
Good morning.
We got a whole bunch of things to talk about, but maybe we should start there. You're playing in the prediction market space in a very big way. What is your sense of what's going to happen? I mean, it sounds like this may go to the Supreme Court, and what the intentionality of Congress really was originally, you think, when they put the prediction market world into orbit, if you will?
Yeah. I mean, first of all, we're building a financial super app serving our customers across any asset class, any financial transaction, anywhere in the world. So prediction markets is a new space. It really entered the mainstream with the 2024 election. And the thing that I love about it is it's not only a tool to help traders specialize. Now you can specialize in all sorts of things. Right. But it's a great source of information. It's like a complement
by the way,
to the news.
I think the information piece of it is great, assuming that you believe the information is not being manipulated in some way.
Yeah, and that's true. And that's why we're focused. And a lot of talk is about, you know, all these issues that prediction market platforms face. And what we've always been saying is, you know, we're coming into this as a regulated financial services company complying with U.S. laws. And a lot of things get funky when you amalgamate all the offshore platforms.
But here's the thing that I don't know, two pieces to this. One, I don't know if you saw, there was a study done just in the past, it came out in the last 48 hours, at least for Polymarket and I think for Kalshi, where they were suggesting that, you know, it was like the tiniest group of people are the ones that are winning, meaning
they make up the bulk of the trades.
They make the bulk of the trades, and that most people who are participating are effectively net losers.
I mean, I haven't dug into the data in detail. We offer a suite of products. For most of our products, they're self-directed, which means we're not telling people what to trade. We're not making recommendations.
Right.
We do have some products that we take on a fiduciary responsibility. We trade on behalf of our customers. Right. For example, Robinhood Strategies, which is our digital advisor. We also have human advisors through Trade PMR. But yeah, I think you can slice and dice this data in many different ways. And the thing that makes it difficult with these types of derivatives markets is sometimes it's hard to look at them in isolation. You don't know if that person is hedging, if they're speculating, if they have other positions elsewhere, which I think you can always find a way to slice it so that it looks negative. But we're just focused on providing the best access for our customers to this new asset class.
I understand that you can slice data so that it looks negative, but there have been a number of studies, and academic ones, so not funded by the industry, presumably, that show that, you know, retail investors may guess successfully the outcome of the whatever event you're talking about. 51% of the time, I think, is a stat by one university study. But they get in late, and it's the bots, the algorithms that trade on the contract earlier. They make up much more of the volume. And so because they're going earlier and retail investors are getting in at the very last minute, that they're making much more money. There are a number of studies that show that retail investors are at a disadvantage because of the activity of algorithmic bots in this market. Is that a concern of yours? I mean, the bread and butter of your platform is helping individual investors, right? And are you setting them up for in a situation where the odds are stacked against them to actually make money because of maybe it's the lack of guardrails or
Yeah, I mean, I think that the algorithmic bots are a relatively new thing. With a lot of these AI tools that are coming on, you actually are starting to see some retail investors writing these themselves. You know, they'll ask Claude or Codex to generate a strategy for them. And we're thinking about, okay, right now you have to be like a quant or an engineer to do this. But can we make it so that everyone can have access to this powerful technology?
Let me ask you a different one. Sports. Because there's a big, you know, sports is now part of the prediction market space that you're playing in. And I don't know if you saw, there was a fascinating interview with Gary Gensler recently, who made the argument.
That's a name I haven't heard in a very long time.
Right? And the argument he made is, he said, when he was running the CFTC, when the laws were actually changed that allowed for all of this, he said, no senator, no congressperson ever discussed the idea that this was going to be used in the context of sports, and that had it been uttered, even aloud once, this would have never been allowed to happen, because all of these states' rights and states' rules that had already been put in place, every senator who was from one of those states would have been like, we're not doing this. This is crazy. And so he said, if you actually go look at the intent of what the law is at the time, you couldn't get to this place today.
Yeah, I think there's reasonable arguments on both sides of this issue. I'd say the other side of that is that sports is a much bigger chunk of the economy than it was 20 years ago, right? And you have NBA franchises and
totally.
MLB franchises.
I don't disagree, and maybe the law should be updated. I'm just suggesting that the law that's being used to allow for prediction markets to play in the sports space currently, or at least the argument, right? There's lawsuits over this, is using a law that he's suggesting was never intended for that.
I mean, here's the thing. Sports, I think, is going to be an increasing chunk of the business and finance world. They're starting to increasingly converge, and for better or worse. I'm not saying necessarily it's a good thing, but if you think about AI automation and the risks, sports actually is probably like one of the few human things where we have high confidence it's not going to be automated away. So you don't want to watch self-driving cars racing around the track.
So I don't know if you saw over the weekend, Warren Buffett spoke very briefly at the annual meeting with Becky Quick, and made an argument that he talked about the church, meaning the market, and then the casino. And he said a lot more people are playing in the casino than they used to. And I'm curious, as someone who's in your business and space, introducing new products, including prediction markets and the like, whether you see that part of it as the casino.
No. I think that we have a trading side of the business where customers are actively trading, and some of them actually are quite systematic and sophisticated about it. And of course, you have some customers who are just, trading because they like a certain team, right? But as with any market, you have lots of participants. But we have people that have strategies, like you mentioned earlier. Sometimes they're even systematic and automated. And I think this criticism, the same criticism was given about futures markets 40 or 50 years ago. And, you hear it about options markets and even equities markets. So no stranger to it.